there, traders and investors. Bennett Tyndall with tradinganalysis.com. It is Tuesday, January 12th, 2021, and this is your weekly public market update. So traders, last Monday, the market started off 2021 with a very sharp move to the downside. We saw over a 3% sell-off in the NASDAQ 100, and it was certainly an aggressive decline. It was a very trend-establishing looking decline, at least. And I put out a video Tuesday evening suggesting, hey, wait a minute, we don't quite have the required subdivisions here to suggest that this rally has run its course. I think we pushed to new highs. And we did. We broke into new highs. We set new highs in the S&P, new highs in the NASDAQ. And here we are now approaching what I feel could be a very key reversal zone for the markets. We've seen an incredible rally since the March 2020 lows. We're seeing very aggressive buying in risk assets. So investor sentiment is reaching an extreme, which is often a contrarian indicator and can be used along with other signs to substantiate a market top and a market reversal. Now, I'm not going to go as far as to say I'm outright bearish this market, because I do expect whatever corrective pullback does materialize out of this resistance zone to be to be a viable corrective pullback. Okay, I think it's going to be a great opportunity to get back on board this market for those who missed out on this massive rally. Because if you take a look at the investor sentiment and just the overall narrative kind of going into the March low, everybody was expecting not only a retest of the March low as we rallied back, but they were expecting a break to new lows. So a lot of people either missed this altogether and sat in cash, or were perhaps just underallocated or improperly allocated. So we do feel we are getting into a very interesting area in the market indexes, which could present another corrective pullback and another buying opportunity. So let's get into it. We're taking a look at the daily chart here of the S&P. We came out of the wave 4 support zone. I'm going to take you off the daily chart and drop you down to a 1-hour time frame. So taking a look at the 1-hour chart, the move down here to 3672 area was last Monday. And that's when I came in and said, I think this is just a fourth wave, and we rip through support into our upside target zone, and then I'll be looking for the larger pullback. Now, where we stand in terms of the upside, we broke through to new highs. So we've gotten the new highs here in the S&P and in the NASDAQ. And I'm counting this in a couple of different ways. Interpretation number one is the one that you see in front of you here. Let's go ahead and hide the smaller wave structures. So the interpretation that you see here suggests that 38% retracement support will hold at 3778 and yield a move back up into the north of 3800. Here's the thing. We're getting very close to this kind of final subdivision, which could then suggest that the larger corrective pullback is going to set in. So as we approach this zone, be very cautious if we do in fact break through new highs, I would be very cautious as to the move that follows. Okay, so what we have going on here is wave count and validation at 3737. So just like I brought you guys last Monday when I said, look, we sold off to 3672. We'll know if we're wrong on a move south of 3645. A move south of 3645 would have me beginning to protect some of my longer term investments and perhaps even look to get long volatility as a way to trade the pullback that I do think is going to transpire. Now we've got another zone right here in front of you, 3737. So a move south of 3737 I feel will be the ticket to open up the door to the larger pullback. As it stands now, this could just be wave 4 of 5, and we do get another push to new highs. Looking at the NDX, the NASDAQ 100, the NDX, we're tracking a very similar situation here. The move down into the January 4th pullback low did yield a move to new highs, and we're viewing this as either some sort of an ongoing fourth wave correction, which I will show you in technology why I'm favoring this interpretation, or alternatively, as we have illustrated based on the arrows, wave 4 would be anchored here. Wave 5 would then be moved one swing point here to the left, and we would then call this most recent high the top of this 5-wave move. That's when we'll be looking for the larger move to the downside. Being that this is a wave 2, it can take you to all sorts of different retracement levels. Your best bet is to be looking for key support, looking for key fib retracement levels. If we do get moving to the downside in an aggressive manner, I'll be looking to the Feb 2020 market high to turn into support for a potential completion of wave 2. Okay, so if we do get the rollover, which we do think is approaching, we'll be sure to keep you guys updated. And if you are looking to trade this short and you're a little bit hesitant as to how to go about doing that, personally what I would do is I would wait for the initial directional move to unfold, look to the then counter trend corrective pullback to get short for a secondary move to the downside. Okay, so that's how I'd be looking to trade it personally. If you're a little bit hesitant, another way that you could look to take advantage of it is to perhaps trade volatility. You could look to hedge your longer term holdings, sell upside call spreads. You could also take some index trades. So just be aware of the fact that we are getting into that zone, which could present a reversal. All right, now let's quickly look at the SMH. So semiconductors, we were looking at this chart together. I brought you guys this chart. I said, hey, look, I think this is just coming out of a wave 4 triangle and it's going to move to new highs. And here we are again, moving into new highs. SMH, semiconductor ETF, is pushing into an upside zone of fib resistance. This is a very thick clustering of fib resistance. And again, we have a very similar interpretation to that of the NDX. We could just as easily in this particular count move green wave 3 here, call this green wave 4, and there was your final 5-wave rally into new highs in this wave 5. That would make for a little bit of a short 5th wave, which is why I'm leaving some additional room in this pattern to continue higher for the SMH. Now let's wrap it up by looking at the XLK, which is the technology sector spider ETF. And again, very similar to that of the SMH and the NDX, I was calling for a move to new highs. We did not actually get a new high in the XLK itself. So if we're going to entertain the idea that the 5-wave move is completed in the NDX, the NASDAQ 100, or the semiconductor SMH ETF, we would have to do a couple of things here. We would have to move wave 4 here, which is fine. That'd be about a 38% corrective pullback. But then we would have to place wave 5 here on the January 8th high, which would then call for truncation in a wave 5 position. I'm not usually a fan of labeling truncation, especially when 4th waves can unfold much longer than you originally anticipate. So the way I'm going to look at this is perhaps just simply a triangle. And let me take you over to this count here. You can see it a little better. I'm kind of just viewing this as a sideways triangle, which I do think could yield one final push to the upside. Okay, but we're getting close. Markets are getting tired. And I think it's time for the larger pullback. Another sign that, of course, I am watching is the wave structure in the US dollar. So here we are in an instance where we have a near 5-wave decline in the dollar completing. Simultaneously, we're getting a near completed 5-wave advance in equities. And we're also seeing a setup in one of the market internals that we like to watch that suggests perhaps we're getting a bit overbought. Okay, so looking at the dollar, which is another indicator that I'm going to use, it's kind of a 3-package deal or a 3-point deal. 5-wave decline in the dollar, 5-wave advance in the indexes, and divergence of the call-put ratio. So just like we looked at in the NDX and the SPX and the XLK and even the SMH, we could say, look, that's it. 5 waves are done in the dollar. You've got inside of blue 5, 1, 2, 1, 2, 3, 4, 3, 4, 5. Alternatively, we could move everything one swing point to the right, which then gives you a beautiful 5-wave subdivision in orange wave 3. Orange wave 4 was a 38% corrective pullback. Orange wave 3 was 161% of orange 1, which is very common, as you'll see here, in a 3rd wave position. So this still gives the dollar room for downside. One final move lower, markets get one final move to the upside, and then if all 3 of those signs do line up, we could be in store for a much larger move lower. The put call ratio, or in this case, the call put ratio, as you can see here, last February of 2020, we have a beautiful setup where divergence sets in, and then we have the COVID sell-off. Is the market going to see the exact same situation? This is another sign that I'm watching for. So, if you bring this up, you can see call buying sets a high, market sets a high, everything consolidates. Market set a new high, call buying sets a lower extreme, the divergence sets in. Here we are once again, market set a high, call buying setting a high, call buying consolidates while markets are pushing to a new high. Are we setting up for this classic textbook divergence, all while at the same time completing a 5-wave decline in the dollar and completing a 5-wave move higher in the markets? Absolutely, absolutely possible. Okay, so I'm excited. I'm welcoming. I think you should all welcome a corrective pullback when it comes, and be thinking now about how you can take advantage of it. All right, that's it from us today. You can check us out at tradinganalysis.com, and of course tomorrow morning, every Wednesday, 8:45 Eastern on Todd Gordon's YouTube channel, our TA Live Wednesday live stream show. It's always a lot of fun. Hope to see you guys there. Be safe, stay healthy, and we'll see you on next week's market update.